BlackRock is a giant in the world of finance. With a presence in over 30 countries, they are a global powerhouse. They manage trillions of dollars for people and institutions, overseeing investments that span across various sectors and industries. Their decisions impact markets globally, influencing trends and shaping the financial landscape. When BlackRock speaks, investors listen. Their insights and recommendations are highly regarded in the financial community. Recently, BlackRock surprised many by recommending Bitcoin, a move that has sparked widespread discussion and debate. This digital currency has been controversial, yet BlackRock sees potential in its underlying technology and future applications. Bitcoin, unlike government-issued currencies, is decentralized. It operates on a peer-to-peer network, free from central control. No single entity controls it, making it a unique and revolutionary form of currency. Its supply is limited by a fixed algorithm, ensuring that only 21 million Bitcoins will ever be created. This appeals to some investors who are looking for alternatives to traditional assets. They see Bitcoin as a hedge against inflation, a way to protect their wealth from the devaluation of traditional currencies. Traditional currencies can be printed endlessly, potentially losing value over time due to inflation. Bitcoin's fixed supply makes it more like digital gold. BlackRock's endorsement carries weight, signaling confidence in its potential. It signals a shift in the perception of Bitcoin from a speculative asset to a legitimate investment. The firm is known for its conservative approach, typically favoring stable and reliable investments. Their move suggests they see Bitcoin as a maturing asset, one that is gaining credibility and acceptance in the financial world. This could lead to wider adoption by institutional investors, further legitimizing Bitcoin as a mainstream financial instrument. However, BlackRock's recommendation comes with caveats. They urge caution and thorough research before investing. They acknowledge the volatility of Bitcoin, noting that its price can be highly unpredictable. Its price can swing dramatically, sometimes within a single day, making it a challenging asset to manage. This makes it a risky investment, especially for the risk-averse. Investors need to weigh the potential rewards against the inherent risks. As always, a diversified portfolio and sound financial advice are key to navigating the complexities of the investment world. The future of Bitcoin remains uncertain, but with giants like BlackRock entering the arena, its role in the evolving financial landscape is sure to be significant. As the world of finance continues to innovate, Bitcoin's impact will be closely watched by investors and institutions alike. BlackRock's report highlights key arguments for Bitcoin. They see it as a diversification tool. A diversified portfolio is like a balanced meal. It contains different asset classes to reduce risk. Bitcoin, being different from stocks and bonds, adds this variety. Their report emphasizes Bitcoin's potential for future growth. They acknowledge it's a new asset class. However, they point to its growing adoption. More businesses are accepting Bitcoin. Even governments are exploring its use. BlackRock argues that Bitcoin can act as a hedge against inflation. Central banks are printing more money. This can devalue existing currencies. Bitcoin, with its fixed supply, is seen as a safeguard. This argument resonates in times of economic uncertainty. Furthermore, BlackRock points to the increasing institutional interest in Bitcoin. Major companies are investing. This legitimacy attracts more investors. It creates a snowball effect, potentially driving up demand and price. BlackRock's report delves deeper into the potential benefits of Bitcoin. They argue that it can act as a hedge against inflation. When traditional currencies lose value, Bitcoin's fixed supply could make it appreciate. This is similar to how gold has acted as a safe haven asset for centuries. Beyond inflation, Bitcoin offers potential for significant returns. Its past performance has been remarkable, even with volatility. This attracts investors seeking high growth. However, past performance is no guarantee of future results. Bitcoin also provides a level of security and transparency. Transactions are recorded on a public ledger called the blockchain. This makes it difficult to counterfeit or manipulate. This appeals to investors concerned about fraud or censorship. Moreover, Bitcoin transactions are global and relatively fast. They bypass traditional financial intermediaries. This can be advantageous for international transactions or in regions with limited banking infrastructure. Section 4. Navigating the risks, volatility, and regulatory uncertainty. BlackRock's report doesn't shy away from the risks associated with Bitcoin. They emphasize its price volatility. Bitcoin's value can fluctuate dramatically in short periods. This can wipe out investments quickly, especially for those unfamiliar with managing such risk. Regulatory uncertainty is another concern highlighted by BlackRock. Governments are still grappling with how to regulate Bitcoin. New laws or restrictions could impact its price and accessibility. This creates uncertainty for investors. BlackRock also acknowledges the environmental impact of Bitcoin mining. The process requires significant energy consumption. This has drawn criticism from environmental groups. Investors conscious of their environmental footprint may hesitate. Furthermore, BlackRock cautions against the potential for fraud and scams in the cryptocurrency space. The lack of comprehensive regulation attracts malicious actors. Investors need to be vigilant and do their due diligence. Section 5. A divided world. Contrasting views on Bitcoin's future. While BlackRock's endorsement is significant, the financial world holds diverse views on Bitcoin. Some experts remain skeptical, questioning its long-term viability and stability. They see it as a speculative bubble, driven more by hype than by any real, underlying value. These critics argue that Bitcoin has no intrinsic value and will eventually crash, much like other speculative bubbles in history. They point to Bitcoin's notorious volatility as evidence of its instability, making it a risky investment. They argue that such volatility makes Bitcoin unsuitable for long-term investment, as its value can swing wildly in short periods. Additionally, they question its scalability and ability to handle large transaction volumes, which is crucial for any currency aiming for widespread adoption. However, proponents of Bitcoin argue that it's still in its early stages, much like the internet was in its infancy. They draw parallels to the internet in the 1990s, suggesting that Bitcoin's full potential is yet to be realized and that it could revolutionize the financial world. Supporters believe its decentralized nature and limited supply make it a valuable asset, especially in a world facing economic uncertainty and inflation. The debate over Bitcoin's future is likely to continue, with strong arguments on both sides. As with any new technology or asset class, there are inherent risks and potential rewards. The key is to understand both sides of the argument. Investors need to carefully consider their own risk tolerance and investment goals before making any decisions. It's essential to stay informed and weigh the pros and cons thoroughly. As Bitcoin continues to evolve, its adoption and integration into the global financial system will be closely watched. Whether it becomes a mainstream asset or remains a niche investment, only time will tell. The future of Bitcoin remains uncertain, but one thing is clear: it has sparked a global conversation about the future of money and finance. Section 6. BlackRock's Bitcoin bet. A calculated risk or a paradigm shift? BlackRock's recommendation of Bitcoin marks a significant moment in the financial world. This endorsement from one of the largest asset management firms globally is not just a casual nod, it signifies a deeper exploration into the realm of digital currencies. This financial giant is dipping its toes into the world of digital currencies, a space that has been both lauded and criticized for its volatility and potential. Their report presents a balanced view, acknowledging both the potential benefits and risks associated with Bitcoin. They highlight the transformative potential of blockchain technology while also cautioning about the unpredictable nature of the market. Their move suggests a growing acceptance of Bitcoin as a legitimate asset class. This is a significant shift from the traditional skepticism that has surrounded cryptocurrencies for years. This could encourage more institutional investors to follow suit, potentially leading to a broader acceptance and integration of Bitcoin in mainstream financial portfolios. If so, the demand for Bitcoin could increase, potentially driving up its price. This surge in demand could lead to a new era of growth for the cryptocurrency market. However, investors should remember that Bitcoin is still a volatile asset. Its future is uncertain, and the market can experience significant fluctuations in a short period. BlackRock's endorsement is not a guarantee of success. While their involvement lends credibility, it does not eliminate the inherent risks. It's essential to conduct thorough research and understand the risks involved. Investors should not rely solely on endorsements, but should delve into the specifics of the market. Ultimately, the decision to invest in Bitcoin is a personal one. It requires careful consideration of one's financial situation, risk tolerance, and long-term investment goals. It depends on individual risk tolerance, investment goals, and understanding of this emerging asset class. Each investor must weigh the potential rewards against the possible risks. BlackRock's report provides valuable insights, but investors must make their own informed decisions. The landscape of digital currencies is ever evolving, and staying informed is crucial for navigating this complex market.